What is the funding rate of perpetual contract? Welcome to Gate.io Futures Academy, a professional, systematic, and universal video-based learning platform. Perpetual futures contract is a special type of futures contract. Unlike traditional futures, it doesn't have an expiry date or settlement date. Funding rate is an important mechanism to keep the price of the perpetual futures anchoring spot price. It is used to balance long-short sentiment. When there is an unreasonable price spread between perpetual price and spot price, funding rate mechanism can bring the price spread back to reasonable levels. Generally speaking, the larger the price spread, the more effective the correction effect will be and the perpetual price will be closer to spot price. In a bullish market, the funding rate will be positive and longs will have to pay funding fee to shorts. Conversely, the funding rate will be negative in a bearish market. Shorts will have to pay funding fee to longs. The funding paid or received equals nominal position value * funding rate. The funding fees are paid peer-to-peer. The platform takes no fees from the funding. The fees are charged every 8 hours, 3 times a day. Gate.io funding fees are settled at midnight, 8 o'clock and 1600 hours Universal Time coordinated every day. Traders don't need to pay the funding fee if they close the positions before settlement time. In current crypto market, it is widely believed that the funding fee is used in following 2 cases. 1. Help to assess market sentiment, according to the principle of funding fees. When the market sentiment moves closer to one side, the market will start to diverge and the funding fee mechanism will take effect. Then, the dominant side will have to pay relevant costs. We believe that the funding fees have following patterns in the market. 1. Funding rates are positively related to price trends. 2. Funding rate is a lagging indicator to predict market trends. 3. Funding rate is somewhat relevant to assessing market performance. 2. Achieve risk-free arbitrage between crypto spots and futures trading. Specific steps. When the funding rate is greater than 0, buy in crypto spots and sell out crypto futures of equal amounts. The prices of futures and spots are even and then funding fees can be earned risk-free. When the funding rate is equal to 0, sell out all the spots and close the positions to complete the arbitrage. When the funding rate is greater than 0, the positive arbitrage profit can be obtained by the following formula. The positive arbitrage profit equals funding fee profit. Transaction fees of opening/closing positions of spot and futures. When the funding rate is less than 0, open a long position and use leverage to borrow in same amounts of cryptos to short and then wait to receive funding fees. When the funding rate is equal to 0, close the positions and pay back the borrowed cryptos to complete the arbitrage. When the funding rate is less than 0, return on reverse arbitrage equals funding fee profit. Leverage interest transaction fees of buy, sell and leverage trading transaction fees of futures opening/closing positions. It is worth noting that futures and leverages may cause liquidation when the price fluctuates rapidly. The imbalance of positions will certainly cause losses. Be careful about the leverages in real trading. When the funding rates fluctuates rapidly, avoid situations where arbitrate returns can't cover the transaction fees and interests of borrowing cryptos. To make funding fee arbitrage simpler, Gate.io provides automated arbitrage bots for free. Open our Gate.io website. Click Copy Trading Strategy Bot on navigation bar. Click Create a Strategy. Find spot futures arbitrage in reliable and long-term yield. After easily typing in parameters, automated arbitrage strategy will be carried out without human interventions. Have a try yourself if you are interested. Thank you for watching. Follow Gate.io Futures Academy to find more.